All right, let's check in with the eNCA Money Desk. Devon Morgan standing by.
Hi, Devon. So no doubt this latest move by the United States to ban all Russian oil imports is going to affect all of us.
Absolutely, indeed. I mean, we heard Simon Marks allude to that point a little earlier in the interview with him. The conflict now in its third week, Sally, it's sent commodities such as oil, gas and coal sharply higher. And as you say, stoking fears of sustained inflation. It means price rises. This move by the United States to ban Russian oil imports will only heighten those risks. Market analyst Wayne Mccurrie joins me now for more. Wayne, thanks very much indeed for your time. I mean, understandably, you're not a political analyst, but I mean, do we know what the game plan is of such a move on the part of the US? I mean, would this ultimately force Russia to pull back from the Ukraine, this banning on the oil imports? What's to be accomplished here?
Look, it's just continued pressure on Russia. And when you look at Russia, now imagine the Russian citizen. Your currency has halved. Literally in a week, it's halved. You haven't opened your stock market yet, so you don't know if it's down 50% or 80%. You can't get access to any foreign funds that you've had. You can't transact with a foreigner because they're off the banking system. Russia today said we are giving every citizen a payment holiday, so you don't have to pay your mortgage or your motor car or all your personal loans or anything like that. I mean, this is the extent that they've gone to try and keep something alive in the economy. And at the end of the day, I mean, it might take a while, but economically, this is truly unsustainable. Now, countries, America banning oil is largely symbolic. They don't really bring in Russian oil. They're largely energy self-sufficient. But the UK said they've banned oil now as well, but they're still importing gas and coal, and Europe is still importing lots of gas. And certainly, I think there's going to be intense pressure on Western governments to say, no matter what the cost is to us, you must ban all Russian imports. Even if we suffer, Russia will suffer significantly more. And companies, Shell refuses to do business in oil. Oil traders aren't touching Russian oil. So the effect was there was actually a ban on Russian oil before that was actually announced politically, because no Western country, no Western oil trader, no Western oil company is going to touch Russian oil.
You mentioned something a moment ago when you said, look, it doesn't really bother the Americans too much. When you look at the reliance or the reliance not as big as the European countries on oil for the United States citizens. Yes. But, I mean, the trickle effect is there, isn't it? Because you have the oil price that will definitely take a beating from this. No doubt it will have an inflationary effect on us.
Yes, it will. Now, there's two aspects related to that. First of all, clearly it will be inflationary, but central bankers are not going to up interest rates any faster or to any greater extent than what they were going to do before this, because they know the pressure on the consumer. So I don't think this will bring in let's call it a new round of interest rate increases. The second thing is we must remember it might take a while, it might be logistics, it might be difficult, but there's actually no shortage of oil anyway. Even without Russian oil, there's actually no shortage. And one thing I've learned about commodity prices, when they go up to these high levels, output increases quite dramatically somehow, because you had this one deposit that wasn't economically viable at $70, now at $130. That deposit, that well, is completely viable. So there is actually no shortage of oil in the ground, even if Russian oil is in fact banned. It might take a while and prices might go higher, but this is not a commodity that there's actually a shortage of.
Wayne, just a quick one before you go. So I just looked at the screen a moment ago, $131 for Brent crude oil at the moment. I was expecting that to shoot much higher as we heard that announcement from the US President Joe Biden there. It never really happened, and I'm assuming that it happens just before that, where investors reacted to shoot the price up. Do you see oil increasing further after this big move by the US, perhaps in the next few days or weeks?
Look, it could very well do it, but as I said early on, there's no shortage of oil. And once all the logistics are sorted out and maybe, I mean, I actually think the war will come to an end relatively soon because it is unsustainable for the Russian economy. I mean, they're going to have rioting in the street because people's livelihoods have been destroyed. I mean, the economy could shrink 15, 20% this year. I mean, it's unprecedented outside of, the major world wars that we've had this much of an effect on the economy. So I actually think it'll come to an end relatively soon. But in the shorter term, I mean, oil price, quite frankly, could do anything. It could go to 100 or could go to 180. I really don't know what it's going to do. But over time, the price will probably fall down below 100 and maybe even significantly below 100, simply because there's plenty of oil around.
All right, we'll leave it there. Market analyst Wayne Mccurrie, thanks indeed for your time.